Welcome to Smart Stock Watch. Today is January 31st, 2025, and we're diving into Gentex's latest earnings report for the fourth quarter and full year of 2024. Gentex, a leader in digital vision and connected car technologies, has just released their financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Gentex's report provides a comprehensive look at their performance over the past year, and there's a lot to unpack, especially given the challenges in the automotive sector.
Revenue and profitability overview. Let's start with the top line. Gentex reported net sales of $541.6 million for the fourth quarter of 2024, which is an 8% decrease compared to the same quarter last year. John, what are the key factors behind this decline?
The decline in net sales is primarily due to a 6% decrease in light vehicle production in Gentex's primary markets, including North America, Europe, and Japan/Korea. Additionally, there was a weaker vehicle build mix, which contributed to a revenue shortfall of approximately $45 to $50 million compared to their initial forecast.
Despite the revenue decline, Gentex managed to achieve a net income of $87.7 million and an EPS of 39 cents. How did they maintain profitability?
While the gross margin decreased to 32.5% from 34.5% last year, Gentex benefited from purchasing cost reductions throughout the year. However, the lower sales levels and weaker product mix did impact their ability to leverage overhead costs effectively.
Operational efficiencies and future outlook. Gentex's operating expenses increased by 22% in the fourth quarter. What drove this rise, and how is the company planning to manage these costs moving forward?
The increase in operating expenses was largely due to higher staffing and engineering-related professional fees, as well as an $8.9 million impairment charge related to a technology acquired in 2020. Looking ahead, Gentex plans to moderate the growth rate of operating expenses in 2025, focusing on supporting their current engineering initiatives without further significant increases.
Gentex has provided guidance for 2025, with revenue expected to be between $2.40 and $2.45 billion. What are the key drivers for this growth?
The growth is expected to be driven by new product launches and technology advancements. Despite a challenging market environment, Gentex is forecasting a 7% outgrowth versus their primary markets, which is quite ambitious.
CEO insights and strategic initiatives. Steve Downing, Gentex's CEO, mentioned several strategic initiatives in the report. Can you elaborate on these?
Steve Downing highlighted the company's focus on expanding their engineering capabilities and launching new products. The full display mirror, FDM Shipments, increased by 21%, which significantly contributed to their revenue outperformance. Additionally, Gentex returned $316.5 million to shareholders through dividends and share repurchases, demonstrating their commitment to shareholder value.
How does Gentex plan to sustain this momentum in the coming years?
Gentex is investing in new technologies and product roadmaps, aiming for long-term sustainable outperformance. They are also targeting a gross margin of approximately 35% by the end of 2025, which will be supported by cost improvement initiatives and strategic investments.
EPS forecast and market reaction. Analysts had forecasted an EPS of 49 cents for the fourth quarter, but Gentex reported an EPS of 39 cents. How has the market reacted to this miss?
The market reaction has been negative, as the reported EPS fell short of expectations. This has led to a decline in Gentex's share price, reflecting investor concerns over the company's ability to meet earnings forecasts amidst challenging market conditions.
What are the implications of this EPS miss for Gentex's future performance?
While the EPS miss is a setback, Gentex's strategic focus on new product launches and cost management could help mitigate these challenges. However, they will need to demonstrate consistent execution to regain investor confidence.
Key takeaways. In summary, Gentex faced a challenging fourth quarter with a decline in sales and earnings, but they achieved record annual sales and continued to invest in future growth. John, what are your final thoughts on Gentex's performance and investment prospects?
Despite the short-term challenges, Gentex's strategic initiatives and focus on innovation position them well for future growth. Their commitment to shareholder returns and operational efficiencies are positive signs, but they will need to navigate market headwinds carefully.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Gentex's performance in the comments below.